crisp.
If I get Paul Bottrell's live trading or something like that for the title instead of, I've got to change that title.
Oh, okay. Yeah, I don't know why yours is like that. I don't know. I'm nobody to really speak to about technology like this. I know what I know, and that's good enough for me, really.
Well, we're not supposed to be, what do we call those things? IT experts.
No, we're not tech heads, are we?
And I'm certainly not even close.
So let's just quickly talk about the FTSE, just on levels. As you just said, Trump has come and thrown a bit of a spanner in the works in as much that he has signed the paper that supports the Hong Kong protesters, and China have said there will be retaliation. I don't know, how much that's going to filter through, but I would have thought that that's going to put a few jitters in the market, and really that's what we're after, really, just some jitters.
That's got to be, and we saw it immediately this morning. Of course, I was in front of the charts whilst that was happening because I do the morning show.
Oh, really?
Immediately went risk off, of course.
Yes.
But that's tempered somewhat at this point. It'll be interesting to see what London thinks of that.
Yeah, I don't think London's going to love it, but I would suggest that there's probably a fairly obvious bounce level, and I'll bring that to you now. I've got, if we look at this on the 4-hour chart here, then we still see that this would be the breakout level. In fact, let's bring it to the dailies to start with. The dailies have got a little breakout level, probably along here, maybe there actually. Yeah, that looks like a pretty good spot there when we kind of consider the previous bounce area, and then also the horizontal level. I'm going to draw up a fib and see if that gives us a 23.3 retracement, and it does, right on the money, 23.6 retracement. So the obvious level for a bounce is around about 20 pips down from this particular point, and that's what I will wait for. We come back to this this price again. It could be a little bit lower. Maybe we do come and touch this zone here. Maybe it's just right on there, possibly. But it's kind of in and around here that I'd be looking for a bounce. And the question after that bounce, if the bounce comes, of course, is does that provide a bounce to give us upside, and then downside, creating what would be let me draw this down there, what would be a head and shoulders pattern along there. That's the big question, but I would be looking for something of a bounce, but not yet. I mean, we're at 7,400, and I'm looking for around about another 20 pip run to the downside. But as you say, this is my issue really with trading this now, is that I've been looking for a bit of downside. I think I've been, I don't think the chart suggests that I was early. And actually, that was complete human error, because I put too much weight on the weighted average of the seasonals rather than the actual seasonal patterns. They weren't in agreement, but they do become in agreement in December. And this is what I'm wondering. Do we come down, pop up for the next day or two, and then we start to see the start of the month next month just start to collapse? You right?
Sorry about that.
That's okay.
Yeah, it sounded like a gun, didn't it?
Yeah.
Trump's here.
Yeah, so that's what I'm looking for. Now the question then becomes: is it a little bit more sinister? Is a downside move more sinister? Because then, if we start to consider the daily charts, my level that I'm really looking for it to come to test is here. All the way down there, this looks to me like a pretty strong horizontal level. It was a bounce back here. It did mess around here, but it did provide some resistance, and then it's provided resistance here. So I'm actually looking for around about 80 to 90 pips to the downside before really starting to look for any upside, if that's to materialize. Because the other thing about looking for that upside, now there's a few, and it might take a while. This is suggesting that is going to be around about the middle of December before these two lines meet. So it could be then. Maybe it's the close of that one instead. So maybe it brings us down to around about the first week in December. So I'll be looking for.
You're just a tad off mic, mate. By the way.
Oh. There you go. Sorry, that was my fault. I had my mic just above my head. Yeah, so we could be looking for around about the first weekend.
Distorted.
What's that? Sorry.
Now you're distorted.
Oh, really?
Ease off a bit. Yeah.
Okay, how's that?
There you're talking.
Okay, cool. Yeah, so I'm looking for it to come down here for about the first week in December. So market's just opened up. We're looking for an easing down. There is a trade here if anybody's interested to the downside, only 20 pips. So you would want your level just above here with an entry right now, which will be around about 4-1 if it comes down. So markets.
I thought we might get quite a marked downward first open.
Yes, which is exactly what's happening. You know, this is a market first dive to the downside, and I suspect it, as I say, it's going to continue. So anybody needs a more simple trade to take, then just trade it short. Just you want to get in short. It's a little bit low now. That's going to take maybe a 1-1 now, but. If you get any kind of bounce, then just trade this one short, because this is almost quite an easy trade in some respects, because it's obvious what's happening. We've reached some significant levels long, and now the market is just taking taking its lead off the back of that information from the US signing that Hong Kong. Paper. Now, the other thing here that is really interesting, which we will get to as well. I'm just going to draw this line. Actually, I really want the line.
Perfect timing, old Trumpy too.
Oh, it's great, isn't it? Yeah.
No trading there today.
Yeah, it's great. There we go. Right, just going to put that in place so we can watch this properly. So let's see if there's a bounce here. Obviously, I don't want the bounce. I'd like it just to crash, and if it crashes, then we should be all in. But we are looking for some significant downside here, which should be, as I say, it'd be fantastic for me, because that's my positions. My positions are short, but if there's a bounce here, I may well trade the long, just to look for it. But this is the issue, isn't it, with the market? It's got so lofty, and we know what fear does. Fear does this, yep. Bang, bang, with no kind of respite. Now, the other really interesting point on the FTSE 100 is this story, which is about the pound. Now, I was saying to you yesterday that there was a really important poll out last night, and that poll has put the Conservatives 60 seats above Labour. I think it's even 6. But Beyond it, you saw that. So that's a YouGov poll, which is thought to be a lot more extensive than some of the other polls that are out there.
Took the London Open trade to about 90 odd pips in profit too.
Wow! Oh, did you trade that?
No. I said I wouldn't trade it.
Okay.
Until we've had a good look at it. But...
Okay, great. So that London Open trade, you have to run it for everybody again. I think would be good.
When you're ready, I'll just go through it. Yeah.
Yeah, that'd be fantastic. So we have popped to the upside. Any upside pressure on the pound is going to provide some downward pressure on the FTSE. But let's have a quick check across the board, because the FTSE 100 is continuing to move down, and I think there's at least another, maybe 10-15 pips still to go. Let's check out gold. Little bit muted, so we can see that maybe the FTSE is reacting more to that pound news. The S&P futures are obviously closed today, so there's no point in looking at that. The CAC is under stress. Gaps everywhere, actually, which is quite interesting. Gaps in the CAC, probably gaps in the DAX as well. There is a gap in the DAX as well, moving to the downside. Euro Stoxx 50 moving a little bit weaker, but nothing hugely significant. The Hang Seng a little bit more muted. And really what this is saying is that pound is probably paying a bit of an effect, because obviously with a stronger pound, that does affect some of the stocks in Europe as well. Let's have a look at the euro pound as well. Euro pound holding steady, interestingly, and I say that is interesting because when we look at the daily chart, there is an incredibly strong area that it's got to get to over here. And if this gives way, and we're going to have to look at this on a clean chart because it gets a bit messy looking at all the lines on the dailies. But if this gives way here, and we'll bring this back to the weekly.
Next stop 84, I've got.
Yes, 84. So there's 100. In actual fact, it's probably got.
It was 82.50. I've got.
Yeah, I think it could go as low as 80 at some point. I don't think necessarily, straight away, but as low as 80 at some point, we could get right the way back down here. And I'll tell you what's interesting about this level is just as we've been looking with the FTSE 100 at potential areas it could come down to, and very often these big moves to the upside that are untested, I kind of look at almost like a gap. And I think that this gap is certainly in existence. And I think for the euro to move higher against the pound, it's got to come back and test this area truly to see if it can hold. So I think that there's potentially another 500-600 pips in the pound against the euro before.
Sounds interesting.
Yeah, I mean, whether that's going to be off the back of the election is another question and another matter. I don't know whether that's going to be the case, but I think that there is some room to travel with this one. But we can see that we are at a significant level there. Looks like we could well be trying to poke our head through this area here, and if this gives way by the end of the month, taking out these lows, then I think a retest and then a breakdown may well be on the cards going into next year. So we might see some real strong pound moves into next year, which again could put the FTSE 100 under some stress. And it's always the question of how far out do you look? Because we've been looking at this pattern for quite some time on the FTSE, and we've been looking at this pattern for quite some time on the FTSE. But is there a true possibility that not only that we get some downside, but we get some significant downside and start to test this? Probably that's the line there because of that touch there. Do we eventually test this primary trend line? And I think there's a chance we could. I think there's a chance we could test that primary trend line, leaving us down 600 to 700 pips at some point going into next year. So interesting times, mate. And as you say, interesting intervention by Donald Trump, and that will probably finally provide the market with a little bit of relief and and a genuine kind of move. I'm a little bit suspicious about this trade deal anyway. I think it's all a bit of hyperbole, and I think that there could well be some real news. Yeah, exactly. There could be some real news about that, which effectively is either they kick it down the road or they actually pull out of the deal. I just don't think Donald Trump has got the appetite for it. Every time they get close, he seems to change the goalposts. I mean, certainly from his tweets. I don't know if that's happening in the meetings, but he does seem to change the goalposts and move the goalposts and then come back and say something like, which is interesting yesterday. They got close to saying that the phase one was signed, but he then gave an interview saying that he's holding back on the deal because he wants a deal which is weighted on the side of America just to rebalance what he believes has been the unfair balance so far to this point with the US and China. So
well, he's not going to let go of that anytime soon.
I don't think so.
In fact, he's not going to let go of that. I mean, that's been his beef all along.
Yeah,
they've been sponsoring the world.
This is the thing. Yes, this is the thing, and he's got an election year coming up. So is he going to be a little bit more kind of aggressive going into that particular year? So yeah, interesting times ahead. But I think the market is going to be under some stress, and as I say, if it ends up agreeing with the seasonal pattern, then we could be headed for maybe a bit of muted price action as we form some sort of distribution pattern up here. But then I think into next week and the start of next month, we might well see some genuine downside, and it's just a question of how far that goes considering the bigger patterns.
Okay, let's have a look at this London Open thing
Yeah.
before we go too much further.
Yeah, let's do that, mate.
We need to have a good look at this and see if it's actually tradable. And I don't mean today. I mean we need to have a good look at this in forward testing and see if we're going to adopt it as a little strategy that we take into this show. All right, you can't see my screen as yet for some reason.
Yeah, we can see it. Yeah.
Can you? Okay.
Yep.
So yesterday, I started giving you one version of the way to trade this London Open on pound US dollar, and it is to isolate the previous 3 bars as we go into London session. So the 7 o'clock bar, the 6 o'clock bar, and the 5 o'clock bars on the hourly chart, right? So here, this one, and this one today. Why have I gone back 4? Don't know. It's a bit silly of me.
So 7, 6, and 5.
Yep. So you're looking at the 3 candles prior to London Open, okay, on an hourly chart. And what you do is you put an entry at the high. You can go 5 or 10 pips above that if you so choose. That's probably a safer way to do it. And you put an entry at the low as well. So it's an OCO here. Whichever one gets triggered, you cancel the other. And again, you could probably go 5 pips below here if you wanted to be a little bit safer than trading the bottom of the bar. And yesterday, this worked out as this candle, and this candle. So the high is here, the low is here. So that's your entry long. This is your entry short. Obviously, it didn't get triggered short, got triggered long, and happy days. Now, stop loss is a thing that we didn't mention yesterday. Few options. You could simply put your stop at the bottom of the candle that breaks the range. You could possibly put a stop below the low, or you could use something like the ATR and put a stop at whatever period you choose to use of the ATR, which is maybe 5, maybe 10, whatever floats your boat, really. I'm only giving you the bones of the strategy. I'm not giving you any risk management of it. But as you can see, yesterday it worked a treat. Whether it does today, of course, is another story. But I'll continue to monitor this and let you know how it goes. If we adopt it as a thing to do, then why not? Let's do it. If it works, it works.
So I've got a question, mate. So if you were to trade that yesterday, obviously we're off and running. What would you do today? Does that mean you have add points? You go long again, or and what happens with the short? So if you put a short in the market, you put your OCO in the market today, does that mean that the stop goes to that OCO level if it's a sell, if you've gone long?
Up to you. If you just enter when the candles get to where they are without a stop loss, right? And then you put your stop loss in after you enter, you could use the candle that enters you, right? So in yesterday's case, you'd put your stop here once you've entered the market.
Yeah.
Or as I said, you could use.
But what happens today to that stop? So to that particular trade, you're long, and then you do a new one every day. Is this a daily? Yes. Right. So but now you
only London Open. You're out of this trade, right? Yesterday's trade, you're out.
You're out now.
Yeah. Oh yeah. You don't hang on all day.
So you just the first hour.
Up to you, but you don't want to go through sessions, in my opinion. You want to be out by the end of London session, which I don't know, might have been here somewhere, so you wouldn't have got the lot of that, and it'd be very rare that you'll get that. I would imagine that amount of pips. But if you want to test the strategy, then obviously we can test the strategy. If it does go into the next session, then we can do it that way. There's no rules after getting in, basically.
Okay, but you need to be out by the end of the day, regardless.
Yes, I believe so.
Okay.
Yeah, I don't think it's wise to go into the next day for all sorts of reasons.
Interesting. Do you know what? I think might be quite powerful with this. Yesterday it was telegraphed that there was going to be you know, something overnight. I wonder whether it's going to be a much better strategy, because you know that there could be something explosive just about to happen. And if you know that there's something due, then that's the point that you potentially trade this one.
Yeah, look, there's a few ways to do that, and I think the problem with that is, what if you're wrong, and you've got a bias? If you're trading a bias, if you're still trading, you know, the OCO, I think you're okay.
Yeah, just on the OCO. So you have no bias. Yeah,
Okay.
you still do the OCO. So you have no bias, but all you have is the fact that there will be movement because there's something released.
Something likely to happen.
Yes. Yeah. So you basically trade it when there's a potential release. Potential trade in the FTSE 100. If anybody wants to take it, I'll literally just grab the screen for a moment here, mate.
Yep, sure. G'day, Lewis, and g'day, LT.
Hi, guys. Yeah, how you doing? Okay, let's do this. Trade on the FTSE. You know, finally we get our potential for a short. It's on the 5-minute chart. You are looking for entry at the low of this particular bar. I'm going to bring you, and I would. What's the low there? Low of 73.91. So your entry will be 73.91 with a stop above this level here. So there's a 12. Let's call it a 13 pip stop loss on that. So the entry is 73.91, and the stop is 13 pips above that particular price. And you're basically you're trading the break of this bar, and you have a first take profit at. It looks to me like it'll be around about 15 pips below. So it's a bit of a 1-to-1, but it could actually turn out to be something, you know, a lot more significant. It's just breaking down now. So if you haven't got into this, then you've well, you may end up missing it. But this has got a little bit more room to run to the downside. So there is that trade there, and it looks like she's off and running.
The one thing that surprises me is that there's been a pullback. I just expected this to explode at the bottom.
Yeah, well, the thing is, I think you know, the reason for that is because the market has been so strong, and also I suppose this gap now becomes a little bit of an elephant in the room. You know, it's probably got to fill that gap at some point. I mean, I don't think it's going to do it in this early session, but if it was to come down to this point, and then yeah, I can see why it would bounce there, but I think it's got a little bit further to run to the downside. If it comes down to that point and close the gap, that would still leave this it would still leave a right shoulder in place, and it probably needs to close that gap before it can truly collapse. But in saying that, you know, we've got a gap here which hasn't been closed. Also, it's not quite as big as this one, but there's a gap here that needs closing, and that wasn't closed before it took off. So so it could actually break down here. Whether it breaks down significantly is the really big question. But I really like. I mean, the weekly pivot down there would just be an amazing move if that could come down, and I think there's every possibility. I have been looking for a genuine move to the downside on the FTSE 100, and I think that may well materialize. My only question is, does it happen today? You know, is that enough to topple this? I do think it's going to take a fingernail to push this over, and maybe that's all. You know, that's what we've got, but I could be wrong on that. And the buying has been so strong that I'm not surprised to see it being held up a little bit. But I agree with you, because the thing is, the market has been strong off the back of the anticipation of a US-China trade deal. And if that doesn't end up transpiring, then not transpiring, sorry, if that's put under risk, then why wouldn't the market start to ease back down again?
I think probably the market's waiting for China to actually say something more than what they've already said.
Yes.
I think that's probably what's going on. And
well,
that's why we're not seeing this tank.
You could be right. I mean, they're talking about retaliation, but as you say, we've got no specific detail on what that retaliation may include. I think the other thing that we need to really be mindful of is that we are, okay, first session of Thursday, so there's still some quite a bit of the week left in some degree. But if this bar ends up looking like this, in fact, it's a green bar, so it's going to, it could end up looking something like that. Then that is going to be fairly ominous for the market. So I'm watching this bar sort of fairly closely now over the next couple of days, next day and a half, I guess, just to see what that looks like, because that, as I say, could be really ominous, and it could really suggest that maybe this pattern that we've been looking at, the head and shoulders, may well eventually at least come and play out and get down to this point. Now, if that was to happen, then where are we at here? If that was to happen, then I think that there's a chance that we get the measured move, the breakdown. I just want to double check it. It's going to be somewhere around here. Yeah, that may well, be put this primary trend line in play. So we may well see these lows revisited, and as I say, that's quite a way down. That's like she's at 800 pips. There's 800 pip run to the downside, and it'll take some time, but there's a chance. This market is under stress and it is under pressure. We didn't see that big move to the upside that I was talking about yesterday, that was going to meet that trend line, and that is still a possibility as well. So we've got kind of, as always with trading, two possible outcomes. If we break down, I think there's a really good chance we break down heavy. If we break to the upside, I still don't think there's that much room before a real breakdown. So maybe a 200 pip move up, but a potential 800 pip move down, I think is more than achievable. And certainly, a breakdown of 300 to 400 pips to this point is, I think that's probably my stance. Of the three, I think this would be the one that I'd probably have the highest opinion about it could happen. So I am looking, as I say, for this market to break down, and I've just been waiting for a catalyst. I'm not sure, like you say, is there enough? Have China said enough to suggest that this is it? I don't know, but I think that there's certainly going to be some nervous.
Not saying that right now.
No, it's not, is it? No, it's not. No. It's, as you say, that it's been a fairly muted session. I wonder whether the easing back of the pound has helped a little bit with holding it up. But if this pound holds this level, then the FTSE could be under stress. So I think there's some room anyway, mate. I think there's some room to run, and it's just a case of where and when. Where we get to, upside or downside, or when that's going to happen. But again, the seasonals also agree with some downside coming into the first week. So there's a bit more evidence, I would suggest, that this market's going to break down rather than breaking up right now.
Well, I would think so, based on the fundamentals. But as I say, I think the market's just waiting for a little bit more detail out of China, and then go from there, I think. But I'm probably the second worst person to ask about fundamentals in trading. There is a worse person, that's my wife.
I mean, I don't think I'll be that far behind you, mate, to be honest. It's one of those that when it comes down to the kind of fundamental analytical side, the charts end up telling you anyway. I think that the thing about the fundamentals is that, yes, they do drive the market, but believing that we understand how they're going to affect the market, I think is folly. And I think this is where we really do need our technical hat on, and this is probably where the technical hat ultimately for traders is the winner. Rather than the fundamentals. Fundamentals are great for these investors, in huge companies. But I think for traders, you really just need to watch the charts and be aware that there's a fundamental reason that could be coming out or has been out, and then see how the market reacts, because you get a situation like the Kiwi, and I've been watching this Kiwi CAD because of the kind of chart of the week a couple of weeks ago, and we didn't have one this week because I couldn't find one, but the Kiwi CAD.
Well, I think we found one yesterday, but it's a bit late in the week, I suppose.
Oh, what was the one yesterday?
I think Kiwi is.
Oh, Kiwi. Yes. Yeah, and this is the thing, the Kiwi on Monday had that, or overnight, I should say, had that data release for, was it unemployment? No, it was retail sales, wasn't it? And they were really strong. And really, from that point, I was expecting real takeoff, but that just didn't materialize. So there might be, a fundamental release and reading, but it doesn't mean that that's the one that is going to really trigger it. So, this is the thing about the fundamentals, and this is why it works for investors, because they're taking it as a whole picture, like a weighted average, if you like, of all the different fundamental data. But, from my perspective, certainly I'm looking for a trigger as well as everything else. I am looking at it as a weighted average, but as much as anything else, I'm looking for it to be a trigger. And that can be quite tricky to ascertain. Just when you think you've got the trigger, like a stellar retail sales number, because everybody's been saying about being long the Kiwi, it doesn't materialize, and this is why the technical picture has to win ultimately, and you have to trust it ultimately, because it will give you the sentiment of the way that the investors have read that particular fundamental release.
And that is really interesting, because when that happens, you go, WTF, why didn't that happen?
Yeah.
And then you have to come up, the answer you have to come up with, well, something else is going on.
Yes,
and
exactly.
And therefore, you've got a bias to the opposite side. I should think you would have a bias to the opposite side. And I do. That's exactly how I work. From a fundamental point of view, if something hasn't reacted the way I feel it should, then something else is going on. And if the technicals, as you say, agree with my bias, maybe my new bias, or maybe my existing bias, then that's the time where you really need to get into gear, because you're going to have good trades coming out of that, I believe.
Yeah, agreed. I'll tell you one chart that I think is of interest to me as well right now, as maybe the chart of the week from my perspective, is WTI. I think WTI is going to be under some stress here, and I think that we've seen some fairly decent upside in oil, and I can just, looking at this, I think a test of this lower line as well is there's a chance we get down again. I think there's a chance that we could retrace right the way near or down to this particular level at 56.36. I'll be looking at, but I think a retracement in oil has got a shout as well. Yes, Kiwi long is still my bias, but adding another one, I think that a low down here with oil would be something that I would add into that.
Wow, look at last week's candle, man. Just had a look at that.
Yeah, crazy, right?
400 pip doji. Wow.
Yeah, mad. That is mad. I mean, you'd sort of maybe see it coming up there eventually, but that to me, WCI, as I say, it looks like it could be under some stress here.
Yeah, I'm kind of seeing. Well, you'll paint a picture the longer you look at the chart. But there's kind of three little Indians sitting there for me, but this is a messy chart for me as well. I'm not seeing anything that's compelling, I've got to say.
Right. Well, let's just quickly move to news of the day as well. Just a quick check on Forex Factory. GDP out of Switzerland came in better than expected quarter on quarter. Nothing hugely positive there. Looks like some of the housing sales in the United Kingdom were pretty good too. German preliminary CPI is not being printed. I don't know why. Spanish CPI just creeping up a little bit, and maybe that's why the euro's holding up as well. We obviously got a bank holiday from the United States. Pretty light on data today, mate, which suggests that that
And all
Chinese.
week, really.
Yeah, it has been, hasn't it? I mean, what's what we got tomorrow? Nothing too big. Well, in fact, yesterday was quite an interesting day in the end. Some really good numbers out of the United States. Core durable goods was decent, and durable goods orders was also good. Preliminary GDP quarter on quarter again, managing to hit another forecast beat. Unemployment claims were down. Chicago PMIs. This one I did think was quite an interesting number. That was a pretty weak print in the end. But and actually, it was interesting because the afternoon data was was pretty poor out of the United States. The price index was slightly down. Pending home sales down. Personal income was flat. And this I thought was quite interesting as well. The crude inventories, and maybe that's why we're seeing a little bit of reaction in WTI. It looks like those crude inventories have climbed just a shade. So yeah, so some of those crude inventories are being held is probably not great for crude. Japan's retail sales was an absolute tanking as well. It was pretty abysmal. So not any kind of indication that there's a pickup in consumer data over in Japan. But some of the other numbers from America, as I say, pretty good. I think the real numbers we should be watching from America right now are to do with the consumer, because it seems to be a consumer led rally. And can the consumer continue to hold this up while all the rubbish over with China continues to happen? So I think we're probably waiting on those. I think we get a bad consumer print, then things could really start to happen with the stock market. Not so sure about whether that will move the Fed. In actual fact, I would suggest it probably wouldn't move the Fed. But I think that if we saw some weak consumer numbers, then the Dow and the S&P may well suffer. So we're probably waiting on some of those types of numbers as well.
Well, the one thing that isn't happening at the moment is clarity for me, I've got to say. I should have a look at some, well, actually, that's not true. They're clear things, but they're not setting up for me at the moment. You want me to take a look at the currencies, mate?
Yeah, let's do that. Just before you move on, that looks like manufacturing PMIs out of China on the weekend also could be of interest. So we'll look at that. Everybody watch out for that on Saturday. So that's a Saturday release. Yes, let's check some of the currencies and tell us, see what they're telling us.
Oakley dokley. Look, I've got firm fixed opinions here, and they're always dangerous when you've got firm fixed opinions. You need to be a little bit more flexible than that. But that said, I'll tell you what they are anyway, and we'll go from there. Euro US dollar. Look, this is now looking very, very interesting. I've been waiting all week for this to happen, and that is this trend line or trade line to give us something. And it hasn't given us anything yet, but we have breached it, and that's cool because now we've got an opportunity to trade. So let's drill into that and see what we've got. Almost perfect, but not perfect enough. And I think I said this morning in the show. Great break of the trade line, great consolidation underneath, nice rejection of the bottom. Not quite what I'm looking for when we come back into the range, above the trade line, and definitely not what I'm looking for when we get the retest. So that kind of yuck. It's almost what I want, but it's not what I want. What I need to see here was a nice decisive bar to come back and retest the trade line or re-breach the trade line and give me something of a candle to trade. That is not a candle to trade. Of course, this could go, and I'm talking long here, right? I'm not talking anything else. This could go, but what we're seeing at the moment is why I don't trade little candles like that, because it doesn't take much for the market just to come and tip you out. I'm not saying that's the wrong direction. I still think that's quite possible, but it's really changed things in terms of that trade setup. What I need to see right now is a bearish decisive bar, and if I don't see that anytime soon, I lose interest in that false break, frankly. So then I would be waiting for a secondary confirmation, if you like, perhaps off this trade line, that would look something like this: break it, take out the highs, come back and retest it, then look to trade long. I'm not committed to a long bias, I must say, by any stretch, but it seems the most logical thing that would happen from the base of this range. That's a dangerous precedent to have. As I say, if you're basing things on logic, that's not a great idea. But it's a good starting point, and that's where I'm at. So, love to have seen a good bar here, so we could have taken the false break trade, but it's simply not there. It's not possible for me to trade a bar like that. It's crazy. Now, cable. Had we taken the bottom of this candle as our entry on the breakout trade or the London Open trade, we would be feeling quite ill at the moment. And that's what I said before. Maybe you want to sneak 5 pips underneath the low, and maybe you want to sneak 5 or 10 pips above the high before you take that trade. That's probably a wise thing to do based on what we've seen here. The reason we're doing this live and forward testing it is to find out exactly things like this. So, there's something that we've just learned from this particular session. We need to get our entry a little bit below the low of that bar, and therefore the low of the trading scenario. And similar, we need to get our entry long above. And certainly, if you look at the chart, DR1's telling you that you don't want to be trading long into that. So that just makes perfect sense, does it not, to put your entry above DR1? And it makes sense to put your entry below that little swing. Okay, it's not a big swing, but it's there. So, there's the benefit of forward trading or forward testing. You actually get to see these things happen in front of your eyes, rather than go back and have a look and say, well, okay, I'm not exactly sure how that candle formed, but it looks like this might have happened. Well, we know exactly how this happened now, and we can adjust our strategy to suit that. In terms of actual trading, the pound, I said this yesterday. I believe I said this yesterday. That's a very strong lead in here, and it's pretty tough to be thinking anything but trade a retracement. Well, I think the market this morning has given us a bit of a retracement, but I'm also confused. I'm confused why we only got that much. I thought we'd get something far deeper than that. And as I said, maybe we are waiting for China to respond more in detail than they have. So it's a little bit tricky to trade, and I mean the pound's been tricky to trade on an intraday chart for quite some time. So I'm not surprised that would be the case. Bigger time frames, I think, for the pound if I am to trade it, because it's doing exactly what you would expect it to do. It's going to resistance and coming off. It's going to support and coming off. Whether that support level is strong enough to be trading off is the question mark that I have. And this one probably not. You're probably waiting for it to come down here. And as I said on Monday, this little gap up was confusing. Otherwise, I'm thinking short at this point. But this little gap up turned me off that. And I think I'm still confused about where the pound's headed next, to be fair. We're inside the range that I want to be inside, both of them. But I'm not getting any signals here. I need to come off the top or off the bottom. Just not getting that. The Aussie. Now, the Aussie is giving me I call them shots over the bow. And they're telling me that there's a potential long coming. I don't want a Microsoft account problem. There's a potential long coming. We've got high test bar here, high test bar here, high test bar here. That's a slingshot entry. We've got an approach and pullback from the trend line here. That's a slingshot entry. We've got another approach and pullback from the trend line here. That's a slingshot entry. And now we've fallen away. I'm actually bearish the Aussie, longer term. But as I think I've said all week, there is a lovely target sitting above us here, and it's evident on the weekly chart. This target here, I can see that very clearly. I can also see the base that we've come off. I saw this higher low during, was that last week, week before, but it's now been taken out. So another higher low here gets me interested again at that level in particular, which is what, 67.45. So another 18 pips. If we were to put in a reversal bar here, then that gets me interested again. I'm seeing these shots over the bow, and they're happening on this chart as well. Approach, pullback, approach, pullback, approach, pullback. I'm really got the signals that this is going to break long at some stage. So I'm cognizant of that, and I'm very much looking for a reason to get long. It hasn't come yet, but I'm on full alert for that to happen. From here, what are we looking for? Well, I suppose we've broken this trade line. We've come and consolidated. Now we've got deeper consolidation, but I'm still seeing this level now as the next turning point. I don't see a confluence area off which to trade when we do get there. But if we were to come back above these levels, that's the daily chart. If we were to come back on the 4-hour chart above this trade line and retest it from above, especially at this confluence area where we've got resistance trade line, support trade line, daily pivot, all happening at the same time. If I was to see that, then I'm long. But that's pretty much what I would need to see to get long the Aussie at the moment. And add to that, if China does come out and say, well, here's what we're going to do, and it's going to be substantial, and then the Aussie is going to disappear down to 65 in a heartbeat, because the market will go instantly risk off. And if that's the case, then the Aussie goes. So that's the problem that we've got at the moment. If you're trading against the Trump thing, you've got to be very, very quick to get out of the market. Well, not so much out of the market, but get safe in the market. I think if you're trying to trade against or risk on, if you're trying to trade risk on at the moment, then I think you may have a bit of, well, I'm not going to say you've got an issue, but what I am going to say is you've got to get safe in the market very quickly if you're trading risk on. I think that's wise, because anything can happen at any time now. We've had the fuse lit to a ticking time bomb.
Yeah.
And if that actually doesn't go out, then the ticking time bomb will do as you expect a time bomb will do. So what I'm really looking for is yen strength, Aussie weakness over time. And I'm happy to get into that at any stage. We've got the potential for that to happen right now. We've had a break of this trend line. We've hit resistance, and we've come back underneath crazy bar. We haven't actually had a close underneath yet. If we had a close underneath this trade line and then retest it from below, then I'm a bear very quickly. I think that's a tradable scenario. Again, we've got a beautiful trade line sitting here. Low test, low test. I think we'll come back here. If we come back here without giving us a signal, then look for a break of the weekly pivot and the monthly pivot and the trend line, then a retest, and there's your short there, I think, on Aussie yen. EuroCAD trade we're still in. We've banked here. We've got our stops at entry, so it's only a winning trade. It's just a matter of how much we take here. If we were to get above this trend line, perhaps we're going, well, we'd almost certainly go to the weekly pivot again. Whether we crash through it is another story. I think this trend line is in pretty good shape for us, and it's not a trend line on the daily chart, as you can see, but the 4-hourly chart is pretty strong. If we get to the daily, then there's another one sitting there as well. So I'm still comfortable with this trade. Obviously, we're going to have some sort of bounce off the monthly pivot. That's what we're seeing. But I'm more than comfortable to stay in this trade. I don't have a problem with it. And as I say, it's only a matter of how much we win out of it. Nothing to do here if you aren't in the trade either. Euro yen's very interesting because we've now come back and had a close on a daily basis inside this range or back inside this range. This is cool because it gives us direction if we see the next candle do what I'm hoping we'll see the next candle do. And that will be not so much on a daily chart, but let's go to the 4-hour chart. What we've had is a re-entry into the range. If I were now to see a candle come back and test the daily pivot and give me a reversal bar, then I would be looking to trade that. I've already got a trade line sitting here. I don't really want to trade it off there. I don't want to trade long off here, but if on a smaller time frame we do come down to the daily pivot, then I'll be looking to trade this as a long. We will have a trade line slipping through here somewhere, I believe. May even be there. So false break of here would be really cool. Be happy to trade that, but you don't want to be trading into those highs without taking profit. Have I got any more? Yeah, I want to look at Aussie CAD and Kiwi CAD again. Aussie CAD is at this support trade line. We've come back inside the range. We've had a big bearish engulfing bar, lower high. I said this on Monday or Tuesday, I can't remember when. That was a mongrel bar right there. But that's what I was looking for, something that gave us a lower high. Incredibly untradeable, but it gave us the lower high. We then got another lower high late in US session yesterday. Of course, I'm sound asleep at that point. That's another potential entry. Now we've got a low test bar sitting on this trade line, and we've gone into consolidation. Makes it very difficult to trade short here at the moment. Really like to see it rally back to here and give us a false break, come back under there, and then go short. That is Aussie CAD. The one I'm really keen on, though, is Kiwi CAD, because we had a good look at this, or Kiwi dollar, and therefore Kiwi CAD. We'll have a look at Kiwi dollar in a minute. Kiwi CAD is now giving us the opportunity to hit some resistance and come back and trade it short. False break of either this one, so consolidate here, back underneath, retest, enter here, take profit before the weekly pivot, let it run. Same thing off this one, providing it doesn't take out this high. If it doesn't take out this high and gives us a false break scenario, then that's probably even a better trade, and we've got more profit in the bank before we get to the weekly pivot on Kiwi CAD. But let's talk about the Kiwi again. We spoke about this at length yesterday, and what we noted was that we're in a really cool part of the sentiment cycle, and we have to go to the daily chart to look at that, of course. We've had a beautiful retest of this high before we get the base, right? That's primary case number one that you need to trade this sentiment cycle. Then we've come back to the bottom of the range. We've come back and tested this level again. All we need now to see is a lower low, which becomes a higher low, if that even makes sense to anybody. So we want to take this low out, right? But we want it to stay above here. So we want a higher low in a, how can I put it this way, a clean out situation. So what this effectively would do is take any stop orders that are, where's my pen?
When you look at that, Jeff,
anybody who's long here right now has got their stops here. What we want to see is all of those stops hit, put in a higher low based on these lows, and just find a way to get in. If you see that, just find a way to get in here, because it will go, and it will likely go to here.
When you look at that, mate,
what I'm looking for on Kiwi US dollar. If I get the opportunity to trade this down to the bottom of the range, that would be my first port of call, and I'm more than willing to do that, because I think there's a very nice trade to be gained here, which will give you a free entry into this massive move if it comes off. So nothing's changed, mate. That is it.
Can
No,
you hear me okay? You can't hear me. Let me
You're
double
obviously
check.
talking to me. I
Yeah.
don't know whether that's because. Can anyone hear Ash?
Should be coming through.
Can anyone hear me? Can you?
I can hear you. Okay.
Oh, interesting. Nobody's answering me. Maybe I'm offline. Oh, okay. Zayden can hear me. LT can hear me. Okay, all good. Must be you, Ash. Can you hear Ash?
Hear both. Hear both. Okay. Just incidentally on the FTSE 100, I'd probably consider closing
I can't hear you, Ash, for some reason.
the FTSE at the minute, just until there's a stronger picture to the downside. It's just managed to recover a little bit. Still think it could collapse.
Okay, I'm going to answer your question, Lewis's question on shorting Kiwi CAD and Aussie CAD. As oil is likely coming down, as what Ash mentioned, then CAD should be weakened. Yes. In general terms, I agree with that. There was some talk on Sunday. We thought that the CAD and oil had become unlinked for some reason. I don't know that I don't know anything about that, to be fair. But yes, to answer your question, then if China news affects the Aussie and the Kiwi, we may be seeing a situation. Yeah, look, I think Aussie and the Kiwi have got bigger issues than the CAD. The CAD has got an interest rate differential that is positive, and I don't know so much about the oil correlation anymore. So I'm still favouring, if we see the China situation unfold, that Aussie will disappear and so will the Kiwi. Not so sure about the CAD. Maybe it will, but it will probably be just a little bit slower than the other two anyway. In the race to the bottom, I think the Aussie and the Kiwi will far outdo anything else. So that's my opinion on that, mate. I'm going to shut up because I can't hear anything. And if you want me to talk, Ash, type to me, I suppose.
Okay, mate. Let's see what we'll do. We'll do this. Okay, see, FTSE 100 stops being hit. They shouldn't have been hit. They shouldn't have been hit. You haven't taken out the high. Let me just have a quick look. This is where it becomes a bit difficult for me because I'm trading a different chart to you. So 91 was the entry.
Yeah, I'm listening to you on delay, Ash. So.
Okay, cool. 91 was the entry. That's 9 pips above. You shouldn't have been hit. Your stop should be above this area. At 7404. You should have a 13 pip stop, so your stop should not be here. Anyway, let's.
I think my chart's still on, by the way.
Yes, your chart's. Oh, sorry. Yeah. Let's quickly do that. Yeah. Your entry was here at 91. 13 pips stop loss off 91 is 7404, which means it's going to have touched 7402, which is there. Yeah, you shouldn't have been. You guys shouldn't have been hit out of that. I don't know why you are. It's 11, so you know we're basically plussing the spread. I mean, it might get hit fairly soon, but you shouldn't have been stopped out already. I still think this market's going lower, but the problem with the FTSE now is that we've got potentially this trend line which runs into this high here, depending on when it happens, at 74.10 on this chart, and I still wonder whether the gap needs to be filled. So there's a possibility that we do drive up. I'd still be looking for the short. Getting taken out of a trade is no big deal because if you still, it just means you get a slightly better price on the upside, because it's likely to, if it takes out this this stop, which, as I say, it shouldn't have done already, but if it does take out the stop, then you should get a slightly better entry price. I still think the short is the trade here. Anyway, let's get back to the question for Jeff. So my question for you, mate, if you can bring your Kiwi still running, cool. Okay. If you could bring up your Kiwi chart again. Yeah. Yeah, wait for it, because wait for it. There's no point in re-entering now, because this market looks a little bit stronger going into the next hour.
Okay, I brought it up, but you'll have to wait 10 seconds.
No problem.
Hear this.
No problem. So when we look at this on a 5-minute chart, I do think that the stops are probably going to get taken out here. But look at this on a 5-minute chart, and there's just a little bit of a higher high from this particular point here. So there might well be some upside, but I think ultimately there's still a pretty good shout that we are going lower. That's the problem, isn't it? There. Well, let's see what happens. We've got 5 minutes before the end of the hour. I'd leave the trade on now, certainly close enough to not worry about it. And we're going into the last hour. Can we get a push to the downside? Because this area might just about have a chance to hold. But if not, then I'd be looking at a higher entry to the downside. Now, let us quickly ask Jeff. Now, if you bring in your Kiwi chart again, and I will monitor this. FTSE.
Okay,
right,
I've done that.
Great. So if you bring up the daily, and because this is in relation to the sentiment cycle. What my question is, when you look at the area, let me see what we got. If we look at the area, which would be, could you minimize a little bit, mate? Could you minimize your daily chart just a little bit for us? There was an area on this one when we saw it a minute ago.
I've done it. I just have to wait till the
That's okay. That's all right. Yeah, it's the area from the 6th of May, I think. So around about the 16th of May. When we look at that, and considering what the sentiment cycle suggests, the very kind of last run in the sentiment cycle is the I'm going to bring up the sentiment cycle just so I can reference it while I ask you this question. Sentiment cycle. So yeah, when we look at the very last part of the sentiment cycle, the last bit is the kind of denial, and then it goes into I guess enthusiasm would be the very last bit. Do you look at that area from, I guess it's from the 12th of May, maybe that's where we start to see the low, from the 12th of April right up until the 23rd of July, when it starts to move to the downside. Even though it was a lot more shallow than what might happen now, would you still consider that as a sentiment cycle? You know, we had the big move down into that area, and then we have the discouragement, the wall of worry, and then denial, and then the return to confidence and enthusiasm. Would you still look at that as a sentiment cycle, or do you think that the picture has to be a lot bigger than that to consider it?
No, I still consider it, because it doesn't really matter where, how long, or what time frame I'm looking at. The sentiment is still exactly the same. You know, there's buyers here, there's big time sellers here, and this is where everybody thinks, oh, we're all wrong if we're long, so we've got to sell. and then they've all given up hope, you know, and then they go into that denial phase, and then we get this aversion. So it's still, to me, it's still the same. Doesn't matter what time frame you're on.
So where would the aversion aspect be in that area from the 6th of May, let's say, to the 23rd of July? Where's the aversion point there? If we think about the anatomy being the same.
Oh, sorry, you're still here.
Yes.
Oh, okay. Sorry. I'm not considering this as part of the sentiment cycle.
Right.
I'm only considering this. I didn't know you were talking about that part. Sorry.
Yes. That's my question. You know, we got an area there. So my question is, how do you know it started?
Okay. So what you're saying is go back to the 6th of May. Okay, so this is the same thing, right? We're coming down here, we've had a big crash. We put in that high. That's this high we're talking about.
Mm-hmm.
Then we've come down, we've put in the double bottom or triple bottom, if you like. Bang, 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 same as there. Then we've climbed the wall of worry. Then we put in the aversion point. We didn't have all of this that we've got now. This is a far better example, in my humble opinion. And for that reason, I think, you know, we didn't really go that far. What you're looking for is to complete the cycle and go up here.
Great.
So that's what we'd be looking for here. We'd be looking for the cycle to be completed and go up to there.
Gotcha.
So, you know, this is not a great example of the sentiment cycle in this area, but I think this is a very good example of the sentiment cycle where we are right now.
So obviously this is where it gets quite it becomes a tricky thing to use in some respects, because it does still have to have some element of subjectivity.
Yeah, I think so. But again, if you're seeing this sort of thing happen, it's still there. I think that aversion part of it's still there.
Yeah.
You just didn't get what you were looking for, I guess, is the answer here. But you hit a resistance level. So if you've hit a resistance level, you should be taking something off the table at that point.
Yeah. Yeah. So really what we're looking at is for the general phases of the sentiment cycle to be there, but it doesn't necessarily mean that that each phase will have the run each of them have. They don't all have the same kind of length. Each phase doesn't have the same length, if you like.
No, definitely not. And I don't think you can expect any single pattern or system to be exactly the same every time.
Yeah.
But if you look at the example that we've got in front of us now, as I said yesterday, I don't think there's a better example of the sentiment cycle that has been printed that we're looking at right now. So you know, I've got to be prepared to trade that.
Yeah. Okay, mate. Great. Well, I think we're pretty much done. The FTSE 100 is still relevant. It still seems to be moving. It still seems to be holding its area, and I think now it's probably still got a decent chance of moving to the downside. I don't think it would be the worst thing in the world to kind of close with little profit, little loss. Actually, it'll be about half of your risk before, but by the same token, now it's starting to move in the right direction. It's probably worth waiting and seeing if there is
just that low to come into play. I don't think you're aiming for a lot down the bottom at the first point of call, but I think, as I say, it could really collapse later down the line. So I'd move stops to break even at the first potential opportunity, which is probably around about 20 pips from where we currently are, around about 15, 20 pips. It's not anything definite from that particular point, but it's probably going to end up being about a 1-to-1 before you can take your profit. And I'd make the trade safe there. I wouldn't be messing about. The market did manage to kind of grind out a bit of a hold, which surprised me, but it has happened. And as Jeff said earlier, we have to consider that there could be something else going on. And I guess what might be going on is that the signing of the Hong Kong paper doesn't derail the trade talks, and I think that's probably what people are looking at. The market is still weak, though, and I think we are still looking for downside at this current stage. I don't think anything is going to cheer it up. The pound still appears to be holding its ground as well, and that's going to put some pressure on the FTSE 100. So if we continue to see the pound holding its line and maybe even moving a little higher than the FTSE, should ease to the downside. So we will be back, and we'll do it again, same trade channel, same trade time next week, and we'll do it all again then. Actually, no, I'm away, aren't I? I am in Singapore. I'm traveling next week. So anybody that's is part of the Master Trader program, I'll see you next Wednesday for the first aspect of that. If not, I don't know what we're going to do, Jeff. We're going to have a bit of a chat about whether you want to take the week off, mate, or what. So I'm not actually going to be back until I could probably, in actual fact, I land on Tuesday.
Oh no, I'll be about, mate. I'll check in and say good day to the guys, and if I've got anything to say, then I'll say it.
Great.
So I'll be here at 5 to 8.
5 to 8. Well, don't be late, Jeff. You want to make that a date. And on top of that, send me a link, and I might, if I can, I will join you.
Happy days. All right. I'm hearing this probably 10 seconds after it happens. So have a great weekend, guys. Those of you who are in my strategy session later on, I'll see you then. And those of you who are in the TTR original show, I'll see you then as well. That's in about 3 hours' time. Have a great weekend, mate. We'll catch you when we catch you.
Great stuff. Thanks, buddy. See you, guys.